Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Monday, February 6th, 2023. And our top story today, a great job reports and a rebound in the market. Our happy days here again. Joining me now to discuss this and a lot more, Jane King is a financial journalist joining us from the NASDAQ. Jane, it's so great to see you again. Thanks so much for joining us on the program this morning.
Thanks, Jeffrey. Great to be with you again.
And it looks like the NASDAQ is firing on all cylinders behind you. So that must be a fun place to work.
It is very interesting. You get a lot of interesting groups come in. You see a lot of IPOs. And I've actually met a lot of really interesting kind of entrepreneurs here at the NASDAQ that are doing all kinds of cutting edge things in technology and energy. And so it always makes learning fun.
Yeah, well, we're really pleased to have you. Thanks so much for making a few minutes out of your busy morning. Jane, the Federal Reserve raised rates again, I think by a quarter point. And I want to start by asking you, you're tracking the markets, you're there at the NASDAQ. What has been the reaction to the quarter point increase by the markets?
Well, it was pretty much shrugged off almost immediately. It was almost exactly as expected. And so that was, when the Fed delivers what the market expects, the market doesn't react that much to it. And so we did see the markets quickly look at that and then turn around and focus on earnings and other things again. And those have just been really unbelievable, especially for some of the tech companies. Now, we've heard bad news from Microsoft, Salesforce, but Meta, they talked about how they're still burning through tons of cash because of their metaverse play, but they're going to operate more efficiently and get rid of some bureaucracy. And the stock is up. I think it's one of the best days it's ever had. It's up 20%. So wow. We'll see what happens. But the NASDAQ's had a really good year so far.
And that's great. And I want to ask you about January. So here we are in February. It's hard to believe when we talked to you at the beginning of January to kind of set the table for 2023. How has the month been? You talked about the NASDAQ. It's been a great month for the NASDAQ, great year. But in general, how have markets done for people watching, maybe don't watch the market every day, although they should watch you every day, of course. What can you tell us about the month?
Well, it's been a great month. The NASDAQ's up, I think, 11% in January, something right around there. Dow is up 2-3%. S&P 500 is up as well. So I think a lot of those stocks that did really bad last year, like the tech stocks in particular, have been seeing the buyers come in. Tesla was up 44% in January. So now, will that last? That is the big question. And there's a lot of debate about that. In fact, I think, of all my time covering the markets, which has been 20 something years, believe it or not, that I've never seen a time that's been so divided in terms of people are like, sell, this is terrible. Here's your opportunity to sell. Other people are like, buy, these are signals to buy. And really smart, successful people disagreeing very much on this. So I'm not sure what to make of all that. But it's been a good start and it's caught a lot of people by surprise.
Yeah, well, maybe you have to take in that both points of view. And maybe if you're a long-term investor, which I know a lot of people watch this program and watch you out in the world, it's probably the long-term investing, stay the course, I would think. And you mentioned earnings. What is up for the next round of economic data? So we got the Fed, they obviously raised rates, and we'll talk about the impact to consumers in our second segment. But when you look at the next bit of economic data that the markets are expecting, what's in mind?
So I think we really keep an eye on all the jobs reports that come out, because that's the one piece of the economy that hasn't loosened up yet. Still very tight job market. And the Federal Reserve would like to see the job market loosen up a little bit so it can take the pressure off of raising interest rates more. So that's going to be the key thing that we keep an eye on. And of course, anything geopolitical. I mean, it just feels like, Russia, China, it feels like we're kind of in an environment where things are a little bit of, tensions are higher. So we keep an eye on all that stuff as well.
And what is the debt ceiling? Does the debt ceiling mean anything? I had asked one of your peers, Oliver Rennick, who works for the TD Ameritrade Network, about this, but I want to get your perspective. You read a lot, and especially in the political periodicals, they've got this debt ceiling and the fight. Does that have an impact to the market, or does the market just say, okay, just like the Fed numbers?
I think the market just shrugs it off. First of all, I don't think Wall Street thinks that we'll actually default on any payments. I think there'll be some kind of resolution reached. So we'll see what happens, but they've given themselves a little bit more time to pay. But I think in the long term, having this amount of debt that we have as a country is bad for the economy. It's bad for the currency. So I think in the long term, this does hurt. It weakens the U.S. economically and otherwise.
Well, Jane, as I said, I need to take a very quick break, or I may not have said it, but I'm going to say it right now. Jane, we need to take a very quick break. When we come back, we'll talk about the impact of the Fed rate hike on consumers. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? They are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Tax audits, tax liens, wage garnishments.
Every day we hear stories like this about good folks who are simply struggling to pay their bills. Each of them are living a frightening IRS tax nightmare, and they are afraid it will destroy their lives.
I'm a divorced single mom, and my ex-husband left me and the kids with a lot of unpaid bills, including unpaid taxes. I was really starting to show my stress on my kids because the IRS had sent me a letter demanding a huge payment from me. I couldn't afford it. So then the IRS was threatening to garnish my wages. I'm already living paycheck to paycheck. That would have put me over the edge financially.
It truly seemed hopeless, but then a friend at work told her to call the tax relief line.
The people at the tax relief line, they told me about something called innocent spouse relief. They worked it out so that all of the taxes from my ex are not my problem. I don't know how that works, and I don't care. All I care about is that I don't owe the IRS a dime, and they are not going to take my paycheck.
Even if it seems hopeless, you should call the number on your screen right now. There is absolutely no cost for the call or the consultation. You are under no obligation. If you are worried that the IRS could garnish your wages, seize your assets, even take your home, call us right now. The Tax Relief Line is here to help you. Now you have a knowledgeable, professional team of tax experts that are ready to negotiate with the IRS and fight for you to save you money. The Tax Relief Line's professionals have successfully negotiated thousands of cases, reducing and sometimes even eliminating the tax debt for their clients. It's very easy to get started. Simply call the number on your screen right now. You don't have to live in fear anymore. The call and the consultation are free.
Well, Jane, thanks so much for staying with us this morning. Really appreciate you hanging around for segment number 2.
Of course. Thank you. Great to be here.
Yeah, this is fun. This is fun. All right, Jane, we talked about the markets, the market reaction to the quarter-point increase by the Fed. Let's talk about the increase to consumers. And we were talking about the debt ceiling, and it didn't matter to Wall Street. But let's talk about consumer debt for a minute. Still going up. Every report, every study you read says consumers are taking on more credit card debt. I guess my first question is, what could be the impact of this quarter-point increase to credit cards and credit card rates and consumers?
Well, that's one of the first places we see it, are those short-term debts. So that's credit cards, it's car loans, things like that. Not so much mortgages. They do tend to kind of follow in tandem, but almost immediately you see it in the short-term rates. So we've seen credit cards. I think the average credit card interest rate now is at a record high, around 20%. So one of the first things, when they first started this interest rate hiking campaign last year, one of the first things I told people was, pay down your credit card debts as much as you possibly can. I mean, I know it's hard, and not everybody's in a position to be able to do that. But if you can make double the minimum payments or something, just to get those more under control. But we actually saw the opposite happen. People, charged a lot over the holidays. I think we had 2 holidays that were kind of pandemic affected. So I think people really wanted to enjoy the holidays this year, and part of that went on credit cards. So we're seeing that, and let's just hope that people take the first few months of the year and really try to get those debts down.
Yeah, and it really can snowball, for lack, I guess it's fitting for the weather in New York. It can really snowball and really impact. And we've done some shows on what people can do to, as you suggest, pay it down or maybe transfer their balance. They really should look into that. Let's talk a little bit about mortgage rates, because this one was, heading into the end of the year, or even heading into 2021 and 2022, there was a lot of conversation about the home buying market. We had historically low interest rates. Now, with the increase, buyers had maybe taken a step back. What potentially could be the impact of this quarter-point increase to home buyers?
That's right. Well, we are seeing mortgage rates go up as well. Now, they went up to about 7% a few months ago, back down a little bit since then, as we've seen some signs of the economy maybe slowing down a little bit, but they've still doubled in the past year. It makes a huge difference in the amount of home you can buy and what your monthly payment is. So in fact, mortgage applications and refinancings have kind of dried up. We've seen layoffs in that area as well. So all the interest rate increases have certainly had an impact on the housing market.
Let's talk a little bit about inflation. This is another economic indicator that everyone's watching. And a lot of people, as you said, they may have bought gifts for the holidays, after Thanksgiving and into the end of 2022, but they're still paying high gas prices. Maybe the cost, I saw Frito-Lay is going to raise the cost of their chips. I love the Fritos. By the way, Frito-Lay is not not a sponsor of the program. They can be, of course. But I want to ask you, in all seriousness, the impact of inflation, are we expecting it to come down more, or what should we be looking for as consumers?
Well, if you listen to the Federal Reserve's comments, Chairman Jerome Powell, after the interest rate increase, he talked about how he does believe that inflation has peaked and that he thinks that it's on its way back down again. It's kind of sticky, though, especially with food. We've seen eggs, crazy increases with eggs, 60%. It's just unbelievable. And some of that is starting to settle down a little bit, although there are a few pockets of still inflation. Gas prices have started to creep up a little bit as well. Yeah. I think that has a lot to do with China reopening. There's just more demand for oil and gas right now. I hope we've seen the highest inflation, which we hit, I think it was June of last year, around 9%, 11% with the PPI. So we've seen that go down quite a bit, although they're still elevated historically. So I guess the thing is we just have to keep an eye on it and maybe cut costs where we can until it goes back down.
Yeah, really good advice. Individually, we really don't have control other than maybe what we consume, but you can control things like your costs, though it could be difficult to do if you're on a limited budget. Jane, we're going to have to leave it there. Always great seeing you, and great seeing you from the NASDAQ. Thanks so much for joining us, and we look forward to having you back on the program again very soon.
Thank you.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more, all in one place. That's right, one place. Check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? We'll visit our website and of course, over 300 streaming platforms. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.